The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the July 21st terrific Thursday edition of today's Trader's Edge. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having an extraordinary day. Let's make sure we do everything we can to just simply have the best day possible. Of course, the easiest way to do that, folks, it's just simply to be able to understand that life happens for us, not to us. Just that one little shift, the one little, what I like to call the 2x4 shift, will make all the difference in the world, because what it means is that you and I can find the gift in every set of circumstance that life is going to throw at us. Today, we'll go take a look at the circumstances of the bulls and the bears, the buyers and the sellers. We'll go make heads or tails, figure out what it is that they're communicating to you and I. I'm absolutely grateful for your presence here today. Most importantly, though, I'm here to serve you. So feel free to pick up that phone, dial on in at 877-927-6648. Of course, internationally, you can reach out to us at 727-445-1044. This is Terrific Tuesday. Of course, none other than the Hotel California at Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 215 points. She's trading out at 17,885. S&P is down 11 points, trading at 2117. We've got the NASDAQ off 16 at 5202. Russell down 6 points at 1253. Gold is flat. It's down $2. Sort of flat, certainly compared to yesterday's trading. Silver is up 4 pennies. Light sweet crude is up 27 cents. Lead the charge today. Got Google's up $7. Google's up $7, trade at just above 700. We've got Thoratec Corp up 750, that's up 15%. Neogen Corp up 14%. Hardware International up $4. CoStar up $4. To the downside, Tesla is the leader dollar-wise, off nearly $14, about 5%. Priceline off $12, that's down a little less than 1%. Lexmark down $11. Lexmark used to be an IBM printer company, so maybe in sympathy to IBM, which is trading down about $10. That's off nearly about 6%. 15% would be United Natural Foods. So, okay, where do we begin out here? Let's begin by taking a look at, short-term as well as long-term. That way we cover a little bit of everything for each of the trading styles for folks that are out there. Now, if you were listening to the show yesterday, I did mention that the markets were approaching stall speed. Am I correct about that? Well, we've stalled, and we have begun pulling back out there. In fact, let's do one of the first things, right? Yesterday, we were taking a look at the summation index, and we were looking at the NASDAQ, right? The NASDAQ, which was at all-time highs, yet its price oscillator had closed below the zero line out there. That is when you get below the zero line, when the summation index turns red. That's the center portion of my screen out here. That actually is communicating to us that in general, on average, for the most part, how about that, that what that tells us is that it is then the sellers that are in control of the marketplace. We're seeing them try to put a bit of pressure today. We haven't seen a substantial reversal inside the NASDAQ composite out here. So, you know, Matt, that's really an anticipation of what's going to happen at the close today. But what I can tell you is as of 1:10 p.m. today, just like at about 1 o'clock yesterday, it is the sellers that are actually in control of the composite. Does that mean anything? I don't know. We'll go take a look at what different elements are out there that you and I can also gauge as to what's going on. If we take a look at the New York Stock Exchange, remember, these price oscillators have more meaning to you and I at 4 p.m. versus at 1 p.m. or 1:11 p.m. as it is right now. But as of 1:11 p.m. inside the New York Stock Exchange, it is now the sellers that are in control of the market. We'll see if they can hold on to it. Not a lot of price damage that is out there. I don't expect there to be, now somebody would say, hey, the Dow's off to over 200 points. That's a lot of price damage. Let's go take a look at that. We'll just got to keep everything in in checkout here. So with regard to the New York Stock Exchange, not a ton of damage. Nonetheless, sellers are in control of the market. That says that what we should expect is a further retracement out here. If we take a look at the Dow itself, price oscillator still above zero. We're going to go check in and see how many of the Dow 30 are actually trading positive. This could get below zero at the close today. Then you'd have all three of the indices that we follow that are easy for us to track out here and understand who is in control of the marketplace. Dow is very close to the zero line out there. I believe there's still about half a dozen or so issues. At least there was as of 15 minutes ago that were trading in the green. Well, let's not guess. Let's just go take a look here. Well, guessing doesn't do us a whole lot of good. No, it's not half a dozen. It's a total of 3 issues. So we probably need all 3 of those issues: ExxonMobil, Travelers, and Chevron. Looks like Chevron would be the most difficult to get below. It's to trade lower today. It's up $1. That is really the leader in the house out there. So it's a toss-up as to whether or not we can actually get the Dow's price oscillator down below zero. So that's what's going on. That's just really a pickup from where we were yesterday. Now, let's go back and take a look at what's going on intraday. Let's take a look at the 120-minute time frame chart for the S&P futures contract. Yesterday, we pointed out that it was making a 1 to 2 A to B equals CD up pattern. That's a 1 to 2 pattern off of lows from July the 9th out here. The actual low came in on July the 7th when we had that nice little hammer candle that formed inside of the S&P, inside of the Dow, inside of the NDX 100, inside of, the New York Stock Exchange. It was all across the board out there. So that marked a nice little bottom. Now you've done a 1 to 2. You've gotten up to exhaustion stage out here. The market's pulling back. Now, the price level where the ES mini on a 120-minute time frame has its largest amount of support. This is over the last 1,600 bars, so you can multiply 1,600 times 120 minutes. That'll tell you how many bars it is that you and I are looking at out here. But it's enough. It's enough of those bars to help us understand that 78%, not 70% of the time, 78, which is the largest number of either closes or opens, happen around 2,089.50. The second largest component of where we have seen price rest. Now, this is excluding what we'll call slow trading time. So I am only looking at 1,600 bars, by the way, of trading in between. I believe I turned it on at 4 o'clock in the morning and then turned it off at 5:15 in the evening. That means I'm really not picking up much in the way of Asia as to what's going on out there. And that seems to really give a better reading with regard to levels of support and resistance, because that's what you and I are looking at on my screen out here. We're taking a look at different levels of support or resistance. And what you and I are doing it on is a 2-hour chart. If you're trading just simply, or you're investing your 401k account, trust me, this is nothing more than just entertainment for you. Or this is nothing more than just simply taking a look at a set of tools here that you could go apply to long-term charts. But otherwise, you should just ignore most of what it is I'm talking about until I get to your time frame chart out here. But if you were more of an intraday-ish type trader, a swing-ish type trader, then as the market was getting up towards a 1 to 2 A to B equals CD to the upside into a resistance level on this 120-minute chart out here for a level of resistance, that should have said, hey, there's a pause that's going on. That way you could prepare for it. And now what we see is as long as price stays below 2113.75 is what we'll call it, what you should anticipate is a test of 2101.50. And if that level breaks, look at 2089.50 to be your level of support. If things break below that, then we'll go ahead and take a look and see what other patterns that are going on inside of the S&P. Now, that's on the 120-minute time frame chart. Now, what I'm also going to do here is I'm going to switch over to this table and this set of charts, and this is going to take a 6 view of what's going on inside of the S&P futures contract. So the upper left is the 30-minute chart for the S&P futures. The center portion, that's a 120-minute time frame chart. We'll come back to that. The upper right's 240-minute. The lower left is 5-hour chart, 300-minute. The center is daily, and the right-hand side is weekly. Now, let me just go back here, just because I don't remember what the number was. But I said it's 2101 and 2089. Now let's take a look at 2101. What friends does 2101 have out here? Let's take a look at what's going on inside the weekly chart. Hey, the market profile, let me turn it on out here. I just want to see what that says that the old resistance level is. That says it's 2104. So at 2104, 2101 should be decent support for the ES Mini out here. If it closes below that, I could actually say you could get down to 2074. Do I expect that to happen? I do not expect the ES Mini to pull back to 2074 out there. However, if we just shift over, and we're in the bottom portion of my chart out, or my screen, I should say, out here. If we just shift over one panel and we take a look at the daily chart, what I do expect is that if we see price move below that 2101, in this case here, 2107 is the point of control. That's the area on a daily time frame where we see the combination of supply and demand really meet. That's that point of control level out there. And if price breaks below that, that shows a level of 2091. And that's where I would expect price to actually be able to pull back to on this move that is inside of the market. Now, if we take a look, and I'm going to go right up, right straight forward from the center bottom, back up to that 120-minute time frame chart. And what I want to show you out here is if you take a look at that little nice chartreuse purplish line on my screen out here, you see as the market, as the ES Mini came off of its lows, right around the trading time period of about 10 o'clock in the evening, back on July 12th, price was able to catapult itself above that, above a number of areas of resistance out there. And one of those was this moving average out here. And when we take a look at that moving average, we now see that price is below that area. That says resistance at this stage here is somewhere between 2117.50 and 2118.75. Right now that says 2118.87. So we'll actually call it 2119. That would be a level of resistance on any move higher. Anything above that, what it does is it negates this candle session right here. Right here at 2 o'clock in the afternoon. This was yesterday. It was actually between 2 and 4. So it was really at 4 o'clock in the afternoon going into the close on the 120-minute time frame. Remember, we took a look at another chart that said, hey, you completed a 1 to 2, A to B equals CD to the upside. You also moved right into a horizontal level line of resistance. And voila, the candle that showed up at that stage was what we refer to as a key reversal session out here. Key reversal sessions, they are important to pay attention to. More importantly, they are really important to pay attention to when you get up to levels of resistance, such as what we saw yesterday out there. Now, if we just were to simply take a look at retracements, and let's take a look at retracement off of the A point of this A, very large A to B equals CD to the upside, that 1 to 2. Look at 2092. That's just a 0.382 retracement. That's just a dead cat bounce. Everybody and their brother, their sister-in-law, you name it, is probably going to be saying, that's it. The highs are in. That's all over. It's time to head lower. Folks, that would only be a 0.382 retracement. The reality is moving back to 2072 as a price point inside the ES Mini would be normal. That's your 0.6. That's your Fibonacci 0.618 number out there. So is there damage going on? Absolutely. A little bit of damage. When we get back, let's go take a look at some long-term charts. Let's make sure we keep things in perspective. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 213. S&P is off 11 points out there. And, you know, before we go to the long-term charts out here, let me just post up here on the screen and inside Tiger TV. This chart here is a 30-minute chart here for both the NQ, the NASDAQ futures contract, and the ES Mini. And I would say that at this stage of the game, it's really all about the NQ out here. It's doing everything that it can to hold a level of support. First, if we take a look at this trading session at 10 o'clock this morning, again, it's a 30-minute chart that we are taking a look at. So between 9:30 and 10, we actually had a hammer candle that formed out here. There's really a combination of bullish reversal signals. You had a hammer, you had a bullish engulfing candle, you had a morning star. Three different bullish reversal signals at 10 o'clock. That said that the low of that hammer candle was very important, which is 4660.25. You're at 4659 as we speak right now. So you're trading just below that. We did see an actual close below that here at the 11 o'clock time frame. And then at 11:30 this morning, we had another hammer that formed. That's really the hammer I think that's important out here, 46.54. So you can see that bulls are really, this is, you know, if you were playing the game of Stratego, which really this is just a board game that you and I are playing. You just need to learn the patterns out here, because once you know the patterns, it's like anything else. You just simply trade the patterns and you move on. You know, the market is revealing information to you and I at all different times, all different time frames. Just depends what time frame it is that you're using to make your trading decisions. This says that the number 4654.50 is really a key level of support inside of the NASDAQ. The S&P, the Dow, the Russell, Maybe not the Russell just yet. Let me put the 30-minute chart out here for the Russell 2000. They've basically broken down, let me just refresh this screen, levels of support. Looks like there's a hammer candle that formed on the 30-minute chart out here. There is. So inside the Russell 2000, what you're dealing with is this little hammer morning star candle. That took place, let me see what the time frame, when did that actually form out here? At 12 noon. And so that says that the low, really it should be the low of this bar out here that took place just before that. That says 1247.20 is going to be a key level of battle between bulls and bears inside of the Russell 2000 on a 30-minute basis out there. Okay, so that takes care of some of our intraday trading out here. As most of you know, my clients and I, we were long. We took our profits off the table this morning. Not exactly at the highs, but really pretty darn close to the highs out there. And then we went ahead and reversed. We went ahead and reversed into short trades. Now, myself, I trade the futures contract. Here's one of the trading accounts, so you can see that, I'm not giving you BS. This is a live trading account out here. So I'm short. Right now, I've got my exit at about 21.03, but I'll come back and reassess it after this show and see where things are at out there. So there ain't no bull here. Now, let's go take a look at the longer-term time frames out here. Let's take a look at the S. And by the way, you can get access to all those trades and all that education with regard to what the market is teaching you. The easiest way to do that is to come on over to TFNN.com under Trading Newsletters. Just click on Mastering Probability. You can get it. It's a free trial. Basically, you've got access to it for 30 days, unconditional money-back guarantee, the whole 9 yards out here. Again, let's just refresh ourselves as to where we actually are at inside of the market out here. And where we're at is we know that the ES mini, what are the S&P futures, where this is the S&P. Forget about the futures contract. We're now moving over to the cash indice out here. We know there's a couple things. Number one, there's an A to B equals CD pattern that is inside off of the March lows out here. And we take a look at A to B equals CD patterns. We're up above the 1.272 on our way to the 1 to 1.618, the 2213 level. The only thing that could get in our way is a bullish reversal signal. Well, we had a little bit of a bullish reversal signal last month. The month of June was a bearish engulfing candle. There's been no follow through as of July 21st. Now, this is a monthly chart, so we won't really know until we get to July 30th. I don't know what the last trading day of the month is. It's the 30th, 31st, 29th. One of those days. Well, today's the 21st, so 7 is probably July 31st. So we won't really know if there's any follow-through to the downside. There could be. But if there's not, then the reversal signal we saw last month, it doesn't mean a whole lot. In life, you want to see follow-through. That's really what it's all about. Follow-through, in this case here, says price is going to head to 2213 at some point in time. It's all a matter of being able to try to time that move. What we also know is that inside of the S&P, that it broke through a consolidation range, a 16, 17-year consolidation between 1552 and 773. Some will take that consolidation lower. We've gone ahead and just simply utilized these levels out here to be able to give us our measured move. And our measured move out here is 2331. So 2331, it ties into more of the 1 to 2 A to B equals CD to the upside than it does the 1 to 1.618. But right now, 2331, 2213 is the price objective out here. There's one other tool, as you know, that you and I can turn on. These are the weekly. I'm going to turn off some of these other things just to make it a little bit clear for you to be able to see out here. So we'll do that. We're going to turn on our horizontal trading ranges. And what that says is we'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 221, S&P down about 12. How about that British Open? How about that final yesterday? You know, a playoff there, and congratulations to Zach Johnson out there. How about that putt he made on the 72nd hole in order to be able to get into a playoff out there? Great tournament. Love watching the British. One of my favorite tournaments. Even more so than I think the Masters at Augusta. Although that's a pretty cool tournament too. But the British Open, you know, the elements of weather that those guys have to play through. Pretty amazing stuff. Now back to the weather patterns inside the longer term charts for the S&P 500 out here. Let's go ahead and finish that up. I wasn't paying attention to my break clock out here, and so we went right into that break just as I was wanted to let you know that when we take a look at the weekly chart, this is actually a monthly chart. I think it'd be helpful if I put the weekly time frame up here, don't you? I think that might be a little bit nicer. Let me do that. It'll go ahead and widen the boxes out just a tad. There we go. So that makes it a little bit nicer. Gives you a feel for what's going on out here. So inside the S&P 500 on a weekly basis, it's got really good support at 2030.53 is the number out here. That's its level of support. What we also know about when we take a look at these horizontal trading ranges out here from a weekly standpoint, show up on my screen, weekly midpoint. We're just simply going to take a look at those midpoints. You can see, let me me put the label up here so I can give you a price point objective as well. Right at the 21.23 number out here, that's the midpoint in between these two horizontal trading range boxes out here, 20.30 to 22.15. And we can see how at that 21.23 level, that's really just acted as a significant area of resistance. Got to give it a few points on either side, but that's really the level that the S&P is contending with. Now, look, we've got a number of earnings coming out after the bell. Now, inside the S&P 500, you've got Apple. It can move it, most certainly. It won't move it like it does the NASDAQ out here. That's why we're looking at those hammer candles on the 30-minute chart. See if maybe there's a tell out here. Is there some kind of tell? And even if there is some kind of tell, William tell, I can't tell you for sure which way or how the market is going to respond to Apple. We'll go take a look at the Apple chart, see if there's anything that we can figure out there. But should the market pull back, hey, now do I expect it to get to 2030, 53 inside the S&P? No, I don't think so. I don't think that is the level that when we went short this morning inside the S&P, when we went ahead and reversed our long position to a short position, that was the price objective that I gave to clients out there. So I'm expecting to pull back. It was questionable whether or not to actually play it out here. Knew that the market was going to come to a stall. There were a couple other elements that were already in play that said, you know what, we ought to just go ahead and take a short-term short on this. But the bigger trade is going to be after this next retracement out here, because the summertime high is not in just yet. That doesn't take place for a few more weeks, at least a few more weeks out here. So expect the market to pull back. Just got to use whatever other tools I've got out here to try to identify where that's going to occur, and then it's going to be time to come back in to the long side on this market, and then very likely what we're going to see is the market make its way up to about the 22.15 level. I'd love it to make its way up to that 22.15 level, because that's where you would run into a significant level of horizontal resistance on the weekly chart. And then what happens? The markets go ahead and they move lower into about the October time frame, and then we have the old Santa Claus rally that comes in sometime in October out there, and then it just simply moves higher into the end of the year. That's the program that's in place as I take a look at it right now. But I'll change that as soon as there's new information that gets revealed to us. At this stage of the game, there is not that new information that's out there. If we go take a look what's going on inside of the VIX index out here, VIX index formed a nice little hammer candle yesterday. Price is up a bit higher. 1445 is where I would expect the VIX index to try to get back to. That's the 50-day exponential moving average. Once it gets up there, that's where I would expect it to stall. That's also another level for us to be watching for the market to go ahead and make its retracement. That's if it can get up into that area, that 1445. It should be able to do that. You're trading at 1271 as we speak right now. If I take a look at some potential divergent patterns out here that say something to think about, well, and if we're looking for clues as to what the market might want to do with regard to the release of numbers, many of which are inside the NASDAQ this afternoon, if we take a look at this chart here, I believe I had a caller last week that was asking the question, is there any chart that I would look at from a divergence standpoint that would be an indication as to the market would be making some type of top out here, some type of, not long-term top necessarily, but at least intermediate-term top? And my answer was yes, there would be two charts. Well, there could be three charts, but two charts that I would look to. And one of those charts was this one that you were looking at right now. And that chart is this. That chart is the equal weighted ETF structure. That's the QQEW. That's at the top portion of my screen. The bottom portion of my screen is the Qs, the actual weighted ETF structure. And when divergences occur here, as we have one now, if you take a look at the upper portion of my screen, we can see that the equal weighted ETF did not make a higher high, whereas the weighted ETF structure most certainly did. Of course, powered mostly in that move higher by Google out there. This chart doesn't really give a hoot or a holler as to what it is that created the divergence. What we know, because I could not tell you the divergence back here in the equal weighted ETF when it was making a higher low back in April of 2015, when the equal weighted was making a slightly lower low to an equal low out there, and which one really pointed the way as to the move higher. Yes, it was the equal weighted that was giving us the indication as to a move higher. Same thing back here, back at the October lows. The October lows, and this is where a lot of folks get caught up into the hooting and the hollering with regard to the news and the sky's falling in and all the other stuff out there. You know, folks, selling fear, easy to do, right? Buying fear, a whole different story out there. However, if you and I just play the game, the board game, the computer game, the visual game out here, and we turn all of that other stuff, you thought I was going to say something else, all of that other, and it didn't start with an S, but all of that other stuff off, then what we can do is we can actually make intelligent decisions out here. We can make informed decisions. We can make decisions that say the probability is this. Because what we know in the past, when we go take a look at those patterns out here, that is meaningful. So we do have a divergent pattern inside the Qs. We do not have that same pattern, by the way, inside the S&P 500, because I said I would look to two different charts out here. Do we have that? Well, actually, I'll take that back. I take that back. I stand corrected out here. Let's put this in a red arrow so I can pull the arrow. We do have a bit of a divergent pattern out here. Come on, work with me. Work with me. There we go. Let's see. We got red arrow. I wasn't referring to you. You guys are always working with me, and I appreciate that very much. But if we take a look at the equal-weighted SPY chart, S&P 500 chart, that is the RSP. That is the Guggenheim chart out here. And then we go take a look at, it was making if the SPYs, whoops, well, how'd that disappear? And the SPYs here basically got right back up to their highs. So we do have two divergences in the marketplace, both of those being divergent patterns. Now, does that mean it's over-packed in? No, it doesn't. It actually just fits along with the scheme that we got to a resting point yesterday, even though the market intraday made a little bit of a higher high out there. We just simply got into a resting point, and it's just simply time for the market to pull back. We'll see just how far we can get it to pull back. Now, there is one other divergent pattern out here that you know that Stevie likes to take a look at, and that is the chart of the Euro-Japanese yen. Oh, speaking of currency pairs, we've got a listener, subscriber that identified a cool pattern inside of gold. So let's go take a look at that here. He wanted me to share that with each of you. But let's take a look at the Euro-Japanese yen. And inside the Euro-Japanese yen, which is trading a bit higher today so far, but it has not been able to take out its highs here from July 10th. That's going to be something for you and I to watch, because at this stage, we also have a divergence here where the Euro-Japanese yen is making lower highs, but the market, the ES mini, the NQ went ahead and made higher highs. That's a divergent pattern as well that also suggests that the market should pull back. So this message of these three charts out here, of everything that we've looked at, and is that the NQ is signaling to us that, hey, maybe, just maybe, it's not going to respond positively to the release of all the earnings out there. But I got to tell you, there are hammer candles out here that you and I are going to have to pay attention to inside of the NQ. So it is still the strong dog. It is still the strong dog that is in the hunt. Now, back to gold. Let's go take a look at Goldilocks out here. And this chart here comes from one of our listeners, and he pointed out, which I did not know, but he was pointing out to me that gold is actually following along pretty well. Nothing ever works 100% of the time. Except me, I work 100% of the time, even when I'm sick. I'm a little under the weather. I've been under the weather for the past 2 days out here. But nonetheless, you know, I just keep on ticking. You may not even know it. But, you know, when I'm done with the show, I'm going to be like, huh. Whew, how did I make it through that hour out there? But if we do take, you didn't care about that, but if we do take a look at the gold futures, it's a 10-minute delay, by the way, on this chart out here, because this is one of my connect the dots. This is one where I connect all of the contracts out there, and unfortunately, because it's a synthetic symbol out there, I've got a 10-minute delay on that. But nonetheless, it's very helpful when we take a look at patterns. We how about that? We also want to go back to a longer time period to be able to see how well this tracks. Now, this is a directional correlation. The bottom portion of my chart is the U.S. dollar versus the South African rand out here, which, as you can see, it's close to all-time lows. Oh, I don't know if it's – I think it is all-time lows. I think it is all-time lows out here. But in any event, what we can see and what this listener wanted, what this Tiger wanted to share with each of you is just simply the correlation between directional price movement of gold and the South African rand. So I haven't had a chance to study it, but just like you and I were taking a look at this, I'm trying to blow this up here right now, just like you and I were taking a look at the equal weighted ETF for the S&P as well as the Qs out here, and we're looking for divergences to help us signal that maybe the market is getting ready to turn. And I'm now referring to gold versus South African rand. What you and I can see is, interestingly enough, and I'm not sure if our Tiger was really focused on that or not, but to the extent that he wasn't, here's one thing that I do notice is that we can see that the South African rand has been making higher lows, and gold, obviously, I don't have to tell you this, just simply, went careening to the downside out here. Now, what you and I would have to do is we'd really have to go back and take a look at this chart and look at other divergent patterns to see if that really holds true. Well, here's one right here. So if we just simply go back into the early May time frame, we can see that there was divergence where the South African rand was making a higher low, and that signaled that gold ought to be finding a bottom, and in fact it did. And that was back in May, went ahead and made a retracement back into the May 18th time frame out here. So we'd really want to go through and see if this is how I would do it. And so I'm just suggesting maybe you go ahead and do the work and see if you can find it, both at highs and at lows out here. Here's one at the highs where the South African rand was making lower highs, and yet gold was going on to make higher highs, and that led into a retracement. So what's interesting about this chart, just simply we take a look at the South African rand, which most people, probably 99.9999% of us, would never even look at this chart. So we're going to just say thank you for this, and we'll go ahead. What we'll do is we'll keep coming back and we'll take a look at it just to see how well this correlation continues out here. But what we can report to you is there is a divergent low inside of that currency pair versus gold. Will that have some meaning? Only time will tell out there. All right, so what else is it that, well, we got the final thing here, and so this is kind of interesting because we have that chart here with price in gold terms, gold in euro terms out there. I know I'll get it out, and that's at 998.70 level. That's the area. That's the bottom portion of my chart where where gold had broken out, priced in euros, came back and tested it yesterday. We know we had a lot of volume yesterday, not so much today, but priced in euros out here. Looks like we're headed back. We're at 1,006. Looks like we're headed back to the 998.70 level out here. Remember, if that level breaks, that says that gold ought to head down to that trend line. That's that green diagonal line that's on my screen. We know that gold has broken through trends, that trend line inside of its gold priced in dollars chart out here. Yeah, today's candle inside gold is probably kind of nice out here. You'd actually like to see it move a little bit lower by the end of the session. That way tomorrow you could actually get a bullish reversal signal out here. You'd have to really have one heck of a price move today in order to get that kind of bullish reversal. We don't have that in place. Danny from Atlanta says, Steve, look at the correlation of gold and then the yen inverted when I have time. So I'll tell you what, Danny, I'll do this during the breakout here because we're about a minute into the break. During that time period, I'll go put a gold yen chart, and we can go ahead and take a look at that. And that's courtesy, that's coming to us from hot Atlanta out there. What a city that is. So we'll try to take a look at that correlation as well. So if we come back to the market a little bit, just a slight little bounce. It looks like that's going on. Not much of anything out here. Let me come back and see what else we have that we ought to take a look at. Dow's off 214. S&P is down 11. You can see that euro, just if you take a look at the euro currency pair versus the Japanese yen, again, you can see on a daily basis, you can see that nice little movement, that nice little bounce that we're getting out there. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off 212, S&P is off 11. Nothing like a little ginger ale. Of course, those of us that are from Detroit, we prefer Verner's. Most people have not tasted that. They think it tastes like flat ginger ale out there. So nothing like that for a little queasy stomach. All right, so I was unable to get the chart looking the way that it needed to for Danny in Atlanta with regard to gold and the yen. So I'll work on that after the show, and we'll see if we can get that chart. We can take a look at it tomorrow out there. for you. If we take a look at so coming out with earnings after the bell, you've got Apple, right? Maybe there's a few others. Maybe David, you could post that in the den for me real quickly. I don't know who else is coming out with earnings, but let's just go see how things are trading. Let's take a look at Apple as we speak right now. It looks like a key reversal, smells like a key reversal, but it looks like maybe. Well, let's still see. The high here inside of Apple yesterday was 132.97. The high today, 132.92. So no, you just really have a piercing candle as we speak right now today. So no clue there with regard to Apple. Apple has been pulling back, testing a gap up from yesterday that had volume of 58 million shares so far. You're pulling back and testing it with 37 million. A little bit more than half the day has gone past, so I can't really tell what it's doing from that point, whether it's testing support on light volume or not. What we do know out here inside of Apple is that you just simply back up to the highs out here in that range from the highs from February 24th. Back then you had volume of 69 million the last time up. You were up with 118. Yesterday you were up with 58. So it doesn't look like it's got the gas to get on the accelerator. But if it does, the expected move, if Apple decides to break out to the upside, you're looking at between about 133 to around 121. So you're looking at about a 12-point move. So about 133, which at 145 or so would be the expected move inside Apple to the upside. Otherwise, what should Apple do if it's going to move to the downside? Where would this thing move to? You'd have to say its first test is just simply going to get back and test this little high volume-ish bar from July 9th. So, can it hold that level of 119.22 to the downside? If it can't, then what it will do is it'll come completely fill this gap down here from January 27, somewhere around the 112 area. So that is the best that I can figure with regard to what Apple is doing out there. We talked about on that 30-minute chart, those hammer candles inside the NQ. Well, let's just look at the NQ alone without looking at the S&P. We can see that there is actually a third hammer candle that has formed inside of the NQ. How about that? So while we were on the air during the time period where we got that close at 1:30 this afternoon, we got a third hammer candle out here. And I can tell you that bulls are certainly out here protecting these lows, anywhere between the 46.60 and the 46.53 level out there. So the expression, if you close below a hammer candle, if you're long, you are wrong. And inside of the NQ, what does that mean? That means that you would fall to the next level of support out here. And where would that be? I don't know. But let's go take a look at our 6 time frames. Let's see if I can do this real quickly out here. Let's go change that, and let's put in the NQ contract for our 30, 120, 240, 300 daily and weekly time frames out here. And that says that with regard to support, 46.44, 46.22. So I'd have to say between 46.22 and 46.44. Folks, the end of our show is here. Stay tuned because our man David White is up next. That squeezably, huggably soft or something along those lines. He is going to be up next. Of course, it is Terrific Tuesday. That means we got the full lineup. Tom O'Brien from 3 to 5 and Andy Heck to take it on home. Have a great Tuesday, folks. Look forward to seeing you soon. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.